How can you expect consistent profits in the market if you don't have an objective and repeatable trading plan that you can execute every day? Let me show you how to create one and set you apart from the 90% of traders who fail. All right, so jumping right into it, the first step that you do is you have to choose your vehicle. What's your trading style? Which market are you going to trade and which instruments are you trading? So me personally, my trading style, I'm a day trader. I trade between minutes and hours, but all within one trading session. Okay, so I'm going to sell my position before the trading session ends. Then you have a scalper, somebody who is very quick. They trade within seconds to minutes, very high pace. They take signals immediately. You have to react very quickly. And then you have swing traders. Swing traders, they normally hold positions between days and weeks. Okay, so you have to be very, very patient, and you're normally on the higher time frame for this. Scalpers, you're normally on the 1 to 2 minute time frame, maybe 5 minutes, between 1 and 5 minutes. Scalpers are normally between the 1 and 5 minute time frame. Day traders, I would say between the 1 minute and the hourly time frame, and then swing traders are probably hourly to daily to weekly time frame. So which market are you going to trade? Are you going to trade futures, forex, options, or cryptocurrency? And then lastly, you want to decide an instrument that you want to trade. If you want to trade any instrument within any market, just make sure that it has very high volume so the spreads are very short so you can jump in and out of your trades. So for futures, that'll be ES or NQ. For options, I know that I use SPY options or QQQ. And then cryptocurrency, I'm not too sure. I don't trade the crypto market, but I'm guessing like Bitcoin or Ethereum. And I'm guessing for Forex, because I don't trade that either, I hear a lot of talk about like Euro and USD pairs, I guess. So moving on to number 2, risk management rules. So your primary goals here are to solidify your daily profit target, your max loss per trade, your max loss per day, and then your win rate. You have to cement and solidify these things because they all pretty much bounce off of each other. For my daily profit target, I normally choose or use risk to reward ratios, which are determined by your win rate. And then your max loss per day is determined by your max loss per trade. I personally don't think anybody should trade more than 2 times per day for psychological reasons. One of the most important factors here is your account size. This is going to determine your daily profit target, your max loss per trade, your max loss per day, and your win rate. Okay, so how much can you stand to lose per trade? And how do you determine how much to lose per trade? These are 2 different questions. One is technical and one is psychological. And on this technical side, you have this formula. Risk per trade equals your account balance times risk percentage. I always recommend 2.5% to 5%. This is completely subjective. Do whatever makes you comfortable. Some people think 2.5% to 5% is very aggressive. But me personally, I think that you have enough skin in the game so your winners can actually count, and then your losers aren't too bad in my opinion. But everybody's risk tolerance is different. This is just mine. Now, the psychological side of things. Before you enter a trade, it's always good practice to ask yourself, how much am I willing to lose to find out if this trade is going to be a winner? When you ask yourself this question, not only are you accepting the loss, but you're putting risk first over thinking solely on profits. Now you're process oriented. You're thinking in terms of probability and not terms of possibility. Okay, so going deeper into this, trading wins and risks. Find the balance. Knowing how much risk to take, when enough to stay ahead. So how do you find your win rate and how do you find the proper risk? These 2 tie into each other. So let's look at this chart that I have right here. So becoming profitable with trading. So you have to figure out your win rate in order to determine your risk. Because if you don't know your win rate, say for example, your win rate is 30% right here, but you're only going for 1-to-1s every time you trade, or you're cutting your winners short, right? So you do 1-to-1s and your win rate is 30%. You're inevitably going to lose. Like, you're just going to lose all your money over time, even if you're trading your system correctly. The only time you should be doing 1-to-1s is if your system has a win rate of 60% or higher. The only time that you should be doing 1-to-2Rs, your win rate should be 40% or higher. 3Rs, 30% or higher. 4Rs, 30% or higher. And then 5Rs, 20% or higher. And from what I've experienced, and this is not all cases, if you find a strategy that actually grants you like a 5R with a 60% win rate or higher, that's phenomenal. But from my experience, what I've seen, the higher your win rate, the lower your risk to reward normally is. And that's completely fine, as long as it matches this chart right here. So how do you find your win rate? You can go on TradingView and do bar replay and backtest 4 months worth of historical data with flawless execution. So you just have to backtest as far back as you can and execute your trade flawlessly, and then at the end of the bar replay they will give you some results. So they'll tell you your win rate, and I'll show you right here. So if we go over here to TradingView, so here we are in TradingView. right? And then say we go to SPY, for example. Sorry, I got all my markings right here. Let's go to Qs. So say if we go to Qs, for example, up here, you'll see replay. You click replay and then you'll see these little scissors. You'll scroll all the way back as far as you can go. I'll even, so at the bottom, you can see that it goes to October 14th, 2024. Boom, right there. And then you spread this, spread this out, pause. And then you press play down here. And then you'll start to see, price action. And this is how you figure out your win rate and test your system and help your execution. And I do this pretty much 3 to 4 times a week per se. You got your buy and sell button right here. So if I wanted to buy right there, boom, it'll tell you where you are. So right now I'm down 63 cents. You can put your stop loss right here. Press buy. You can put your stop loss like down here. And then put your profit target right there. It'll tell you your profit target. If you win this trade, it'll be $1.43. If you lose, it'll be 78 cents. And we know that's kind of a 2 to 1 or whatever. And then down here, it'll show you your total, your cumulative P&L. And if you go all the way to the end, like say for example, if you continue to backtest until you get to the present day or the last trading session, it will definitely give you your win rate. So let's go back here and then I'll show you what that looks like once that shit's finished. So you find your win rate by going on bar replay on TradingView, backtest 4 months at least, or go as far as you can, and you have to do flawless execution so you can get a proper win rate. Okay. Now, how to find your proper risk? You take that win rate after you finish backtesting and you look at this chart. So if your win rate is 50%, you need to make sure that you have at least a 2 to 1 risk to reward ratio, right? And what that means is if you're risking $1, so if you lose $1, every profit target that you have on that trade should be at least $2 minimum. Okay. Now, once you figure out your win rate through backtesting, and then you figure out your proper risk through looking at this chart, and feel free to screenshot it, you need to update your primary goals. Okay, so if we go back to primary goals, your daily profit target, what's your risk to reward ratio? Okay, so that'll be your daily profit target. So if you have a 40% win rate, you should at least go for 2 to 1s. As you're backtesting, you'll see what is more frequent, right? So say for example, if you're backtesting and you're doing 2 to 1s, and let's say majority of your trades work out on 2 to 1s, and let's say that probably 10% of your trades work out and actually reach a 4 to 1. I would normally stick to 2 to 1 to get those base hits and compound those small profits. So your risk to reward will be determined by your win rate and the risk axis on this chart. So that will be your daily profit target. Your max loss per trade, it should be 2.5% to 5%. Feel free to change this, make it lower if it allows you to stay in your trades comfortably. Here's a good tip. Your risk should be so low that each individual trade doesn't bother you if you win or lose. If you're excited about a win, or if you're hurt about a loss, you risk too much, so lower it. So I would say 2.5% to 5% or lower times your account balance. That'll be your max loss per trade. Your max loss per day should be times 2, because you should not trade more than 2 times a day. And then your win rate will be determined by backtesting on TradingView. All right. So your stop loss protocol. When do you need to get out of a trade for a loss to minimize your loss, right? Match your max loss to your stop loss level, determined by market structure or price action. Do not adjust your stop loss to what you're willing to lose emotionally. The market does not care if you're only emotionally able to lose 10% or 5% or 2%. It does not matter. You set your stop loss based on market structure, and your risk or the number of contracts that you have should match that. Stop sets the loss. Don't let the loss set the stop. What this basically means is do not allow your losers to run to a point where you finally stop out. Allow market structure to tell you exactly where your stop loss is, point of invalidation of your trade, and that will be your stop loss. Stop sets the loss. Don't let the loss set the stop. What this means is stop sets the loss. So based on market structure or a point of invalidation, when your trade no longer makes sense, that's when you get out of the trade. Do not allow the loss to set the stop. So don't allow your losers to run to a point where the pain of losing so much money is finally your stop loss. Okay, that's how you blow up an account real quick. So like I said, your stop loss is placed where the trade idea no longer makes sense, and it should be based on market structure. The max loss per trade equals your risk, which depends on how many contracts you're trading. So market structure determines where to place your stop loss. This is your point of invalidation. And your risk, which is how much you're prepared to lose by a dollar amount or points, is determined by how many contracts you have on the trade. So your stop loss is basically matching your max loss per trade with the market structure. And I'm going to show you how this looks right now. Let's say I took this bull flag as a trade. We got an uptrend, we got the high of day, a nice little pullback. And let's say if I entered at the break of the high of day, like this is my entry. Distance between my entry and my stop loss is 44 cents. That's how much I'll lose if price hits my stop loss. This is really good because it's less than 50% or less than half of my max loss per trade. If I increase my contract size by triple, right? I'm just gonna put $1.30. Let's say I increased it by triple. That's $1.30. That's 30 cents over our max loss per trade. But we have to respect the stop loss that this market structure have given us. This is a pullback. This is a pivot point. So this is pretty much the support. This is the floor. So our stop loss is right here. We have to lower our risk or lower the number of contracts in order to meet our max loss per trade, okay? So always make sure you have the correct number of contracts in alignment with market structure stop loss. Okay, so if you had $1.30 between the entry and the stop loss, and say for example you're like, oh, I don't want to risk $1.30, let me move this stop loss up, right? That's not good because price can break through that and then turn around and then go right back up. And then you're going to be sick and you're going to wonder why that happened. It's because you didn't respect the market structure. I hope I explained that well. And let's check on this. So for a quick overview, stop sets the loss. Don't let the loss set the stop. So make sure your stop loss is determined by market structure and apply the correct amount of contracts so your risk is aligned with market structure to respect your max loss per trade. Now, the daily loss limit. The daily loss limit can be percentage or dollars. It's up to you. It's completely subjective and what your emotions can handle to enable you to stay in a trade without any emotional impulses. The daily loss limit is when trading halts for the day if this is breached. For an example, if you have account balance of 2% and say for example if your daily loss limit was 5% or $100, once you're down $100 or down 5% of your account balance, you are done for the day. Not only will this save the emotional and mental capital to trade the next day and avoid emotional and mental turmoil and trauma, but it gives you a chance to fight another day. So you don't have a huge hole to dig yourself out of. Then we have the weekly loss limit. Normally what I do is just, there's 5 trading sessions in a week, Monday through Friday for the most part. So you times the daily loss limit times 5, okay? So if it's 5% or $100 times 5, by the end of the week, you should not be down more than $500 or negative 25%, okay? Those are your max for your weekly loss limit. Moving on to entry and exit criteria. So I'm gonna give you a list of options that you can choose to represent your signal of entry. Like when this signals or when this happens, this is when you enter a trade or exit a trade. Creating a trading plan isn't like feasible for you or you just don't feel like doing it or don't have the time to do it. I do disclose my own trading system. I do Q&A, so I pretty much have every answer for every question that you have to clarify my system to help you learn it and understand. It's very simple, based on chart patterns, very easy to teach. And if that's something that you're interested in, click in the link in the description and schedule a one-on-one call with me. I also have a digital product coming out that will teach people how to execute my system that has a 70 to an 80% win rate on a daily basis using simple chart patterns. All right, so the entry setup checklist. You can use any one of these things, but I will always advise to choose one and master it. Do not have 2, 3, 4, 5 of them. You don't want to spread your focus thin. You want to master one setup and do that every single day because all it takes is one setup and discipline to be a millionaire trader, and that's the God honest truth. So entry setup checklist, we have technical confirmation. Are you going to choose breakouts, patterns, moving average crossovers, Fibonacci retracement levels, right? Then you have candlestick pattern confirmations, you have pin bars, engulfing patterns, pullbacks, pivot points, right? You can choose any one of these. I will always say, once again, choose one and master it. Then you have time frames. You have the 5-minute, the 1 hour, the daily, and everything in between that you can choose from. But it's always good to choose one, solidify it, and stick with it through wins and losses. None of these are 100% success rates. It's all probabilities. They're all going to have their pros and they're all going to have their cons. You just have to be loyal to one. And then you have your entry trigger. So that means at what point do you precisely enter your trade? Like, what is that one signal? Is it going to be in the midst of a trend? Is it going to be a technical indicator? Is it going to be a key level hit? Is it going to be a consolidation period? Is it going to be a pullback period? Or is it going to be a retest? Okay, choose one, master it through the pros and cons, wins and losses, be loyal to it, and over time you'll execute it better. And just by your own experience and knowledge of knowing each criteria, trigger, or setup, it will by default increase your win rate. And not even just increase your win rate, but it can also lower or lessen your losses. Then you have exit rules, right? So what is your profit target? Are you going to use risk to reward ratio? Are you going to use market structure or completion of patterns? Then you have trailing stop loss. I don't necessarily like trailing stop losses, but if that's something that you're into, so you could trail by X amount of points once price reaches X, all right? Then some people do time-based exit. I've heard of this. So people normally exit a trade by end of a session if a target isn't met, or they'll stay in a trade for a certain amount of time, because if their profit target isn't normally hit by a certain time, or if price goes up in a certain direction for a certain amount of time, they might say, okay, it normally reverses around this time, I'm going to go ahead and get out. This is the high of this time period or whatever. Like I said, I don't do that. I don't know it too well. I do risk to reward ratios. I think it's the simplest. I think it's the easiest. So that's what I go with. So pre-market routine. What do you do before the market opens up? It's always good to check for news, right? So like, is there a catalyst coming? And this has happened to me before where my setup formed and I entered the trade and I didn't check to see if there was any news that morning. And once news hit and that catalyst occurred, it knocked me completely out of my trade. Like, it was straight volatility. So it pretty much invalidated the entire setup. The setup was there, but because of that catalyst, it didn't matter. All right. So always check for news. You can use websites like Forex Factory. That's a really good one. I have that one bookmarked. And then investing.com, Bloomberg, things like that. So when it comes to technical analysis before the market open up, you can check for key levels, support, resistance, pivot points. You can identify market biases, like you go on the daily time frame or higher time frame to check to see if we're trending, if we're ranging, if we're consolidating, things like that. And you can also review pre-market price action and then go on an hourly or daily time frame for context. So then one of the most important things is a mindset check, right? So what do you do for mental check-ins? Because every day when we wake up, we do not feel the exact same way that we felt yesterday. Are you in the mood to take a loss? Can you handle a loss? Do you have something going on in your life where if you take a loss in this trade or if you take a L, it'll just tip you over the edge? If that's the case, you probably shouldn't trade, okay? And then you also gotta identify what does success look like today, right? You gotta know when to call a win a win. And when I say success, this means process-oriented tasks or executions, something that's beyond the profits. The same question as earlier. How much am I willing to lose in order to figure out if this trade is going to win? How much am I willing to lose today? And then ask yourself with an answer, how will I respond if my stop loss gets hit today? All of this is mentally preparing you for a loss. The profits are going to take care of themselves. It's so easy to think about the profits, and the more euphoric you become about profits, the more painful losses hurt. So focus solely on the losses. What if I lose today? How will I feel? Am I already on edge? How much am I willing to lose today? How much am I willing to lose to figure out if this trade is going to work? How will I react the moment price hits my stop loss? Prepare your mind and anticipate a loss today. And one of the most important things that you can do is to visualize executing your plan flawlessly. Like, this is very powerful. If you close your eyes and you literally visualize yourself in front of the charts and visualize your setup right there and you execute it perfectly and you just envision that, you know exactly what it looks like, so when it occurs, it'll be familiar. So execution process, right? Creating a checklist before placing a trade, an amazing thing. When we're trading, we have way more time than we think that we do. So just checking off boxes, making a short checklist to meet your criteria and not making any type of execution or placing any trade until a certain box is checked will help you out. And if you place a trade and didn't check a box, you know exactly what task you have an issue with whenever you review your trades after the session is over, all right? So here's a couple things that you can put on your checklist. Is the setup valid per the criteria? Yes or no? Does the risk match the plan? Have you calculated the position size correctly? And during the trade, I always tell my clients that logging your trades or journaling your trades during a session is a million times better than journaling your trades after a session. Because when you're in the heat of the moment, when your thoughts are going rampant, when you're having all these inner dialogues, it's good to write these things down so you can identify what is going on in order to trigger these thoughts. Like, what conditions are taking place in order for me to think the way that I'm thinking, okay? And then after you do that for X amount of sessions, you'll start to see a trend and you'll learn yourself and gain a higher sense of awareness so you can correct all your trading errors, or as many as you can at least. So when you're journaling during a trading session, log your market observations, right? I do all of this every single day, right? And you can check this out in my community, link in the bio. It's completely free. I pretty much explain all of my thought processes and the trades that I take every single day in my community. So feel free to join. So yeah, log your market observations. What is the market doing right now? Where is your bias going based on what it's doing? If X happens, I will do Y. All right, that's a good one. So you can prepare yourself. Log your trade entry time, price, and size in Y. Log why you entered and exited a trade. And then do set it and forget it. Set your stop loss and then do a set it and forget it trade. Set your stop loss order, set your profit target order, and let it go. Do not interrupt it. Take a step back, create physical space between you and your desk. Go for a walk, take out the trash, brush your teeth, do something, but do not interrupt it. And one thing that I learned about set it and forget it trades is that if you're able to place a trade, get up and walk away, you can tell that you're gaining trust into your system or your plan. And also it prevents you from taking impulsive trades. If you've noticed any impulsive trade that you've taken or trade that made you insecure, you are watching it tick by tick. You got your hand on the mouse and you cannot breathe. You cannot take a step back and you can't get up and walk away. So if you're able to do a set it and forget a trade, you know that you're doing it right. All right. So after the trade, log your exit details, your price, time, P&L, and write a brief trade summary. Like I said, I do this every day. You can see it in my community. And you identify if the trade was a win or a loss. And I define wins by how well I executed my plan. That's a win for me, regardless of the outcome. And I identify a loss as succumbing to my emotional impulses, trying to override the outcome. So basically getting into my feelings because I'm trying to push a win for this trade. Okay, that's a loss to me. So identify it as a win or a loss. Talk about your execution weaknesses and strengths, decisions that you had to make that you wasn't prepared for, right? So because trading is a zero-sum game and you'll never take the gambling aspect out of trading, and there's always going to be a level of uncertainty that comes with an ultimatum or decision that you're going to have to make. And you need to log that because you may not always be prepared for this. This is just a learning lesson. So if you had to make a decision, right, and let it fly, write that decision that you had to make down. What ultimatum did the market present to you? All right, so when it comes again, you can be prepared and you'll be able to accept the win or the loss regardless of your decision. All right, so you go out on your own terms. So positive and negative thoughts and behaviors, free thought venting session. I think this is really key. So this is a complete brain dump of everything that you felt, unscripted, unfiltered, unstructured, just brain dump of everything that happened during this session. How did it make you feel? How did it go? What do you want to do more of? What did you learn? What do you want to do less of? What feelings did you hate feeling and why did you feel like that? How were you triggered, right? So write down all of this in just free game, just unfiltered thoughts, right? And the more you do this, the more you actually relieve yourself of the weight that trading can actually put on you. And then lastly, today's grades and tomorrow's goals. So with my clients, I always do grades. I like to leverage competitiveness and gamify the process of trading so we can turn our outcome-based thinking, that's our default thinking is outcome-based, and we can turn that into process-based thinking because now we're gamifying it and we're trying to increase our grades every day, kind of like a report card. And then tomorrow's goals. Tomorrow's goals will always be today's weakness. or shortcomings. So whatever you did today that was a trading error or a mistake, the complete opposite of that tomorrow. Okay. So you sit here and you go to my community. I have a discussion board called Lawrence's Daily Trades, and I literally notate all of my trades. I try to do it every single day. Some days I've missed, okay, but it's a good amount in here, and I try to do it every day. So yeah, I just pretty much talk about everything: my execution mistakes, weaknesses, strengths, observations, realizations, positive thoughts and behaviors, negative thoughts and behaviors, free thoughts, tomorrow's goals, all of that, right? And if you go through all of these, you're going to see a lot of similarities in each one of these, right? Like I'm doing the same things over and over and over again. Even like chart patterns, I'm doing the same things. So I screenshot this. I make notes, I draw arrows, I point out exactly where I entered, where I took profits at, everything. And this is something that you have to do every single day if you want to get better. Okay, so yeah, journal all your trades with screenshots, analyze what went well and what you can improve on, check for emotional decisions, check for any ultimatum decisions due to the inherent uncertainty aspect of the game of trading, right? What we just talked about. Performance metrics, your win rate, your average RR ratio in the live markets, not just back testing. Your profit factor, so you can do your profit factor of total profits divided by your total losses. This actually helps align your win rate with your actual performance, okay? And then number of trades you're taking, which should be no more than 2 trades per day. Any more trades than 2 will open up an emotional door and cause you to spiral out and drain your mental capital. And then at the end of the week, you want to do a weekly review. Identify behavioral patterns, right? Identify reoccurring mistakes and why you keep making these same mistakes. And then the successful setups so you can optimize and get better at them and be more familiar with them, so once they present themselves, you can exploit them for bigger gains. Then adjust the plan and behavioral patterns if necessary based on data, not emotions. So if you have a plan, just like this trading plan, certain things that you can implement that will increase your success, not just P&L wise, but emotionally and mentally. How are you behaving when you're in profit and you're feeling euphoric and you want to push that profit target up just a little bit more? And why you're doing those things, right? And you'll start to see these patterns. And once you start to see those patterns, you will see what's costing you the most money. Therefore, you can set daily goals to combat those unprofitable habits. All right. Then we have psychological and emotional discipline, predefined responses. So if you're feeling impulsive, you should be done for the day. After a losing streak, you should trade less or take a break. After a winning streak, you need to stay humble, follow the plan without overconfidence, and consistently execute. And then lastly, do not take a break. When you're on a winning streak, do not take a break. Don't over leverage. Don't be overconfident, but do not take a break. Keep following the plan. Keep being consistent. Don't change anything. Then we have daily affirmations, a few things that I say to myself or I've heard people say to themselves when I'm on social media and threads and all that. So I trade my plan, not my emotions. Discipline brings profitability. Losses are a part of the process. Less is more is the biggest thing. When you're in a drawdown, our natural instinct is to do more and to trade more to get out of a drawdown. But what you're supposed to do to get out of a drawdown, if you're in a huge drawdown, is to trade less and to trade with less risk and slowly make your way out of that, out of that ditch for the most part. So less is more, less risk is more, okay? So continuous improvement plan. How are you going to get better every single day? So for education, commit to learning yourself more and more, right? Like, what are your triggers? What are your best moments? What are your strengths? What are your weaknesses? What are your game changers, right? A lot of times people will say study books and courses, but it's like information overload is a thing, because if you keep trying to study technical analysis, you're going to think that you found a system that's better than the one that you're trading right now, or you're going to think you found an indicator that's better than the one you're using right now. But everything is going to equal out one way or another. If it's going to be a high risk reward and a low win rate, or a high win rate and a low risk reward, or maybe you might find something that's balanced, and everything is going to have its cons that are going to trigger you, right? So you might as well just stick to one, learn it inside and out, and stop learning so much about technical analysis, but learn more about psychology. Learn how the mind works. Learn about, your amygdala and your deliberate brain. Learn more about yourself, like what conditions are triggering you, what conditions bring the best out of you. Go on Amazon and find a shadow work journal and really fill it out. It will really help your trading out, believe it or not. Mentorship and community. There's a link in the description, join my community. I'm creating a free beginner's trading course, and I post my daily trades and a lot of resources on a daily basis. So participate in trading forums or mastermind groups, share ideas and seek feedback. Join Minimal Trading, link in the description. So monthly performance review. Write out the most common habits and traits that cause 90% of your failures. And the only way you can do this is through extensive journaling, especially journaling your trades, journaling after your trades, and also setting daily goals, okay? And also gamifying and grading your executions on a daily basis. So you pick one setup that you grew the most confidence with and yielded you the most, and you master that, okay? You lean into that, all right? You exploit that the most. Backtest extensively to adjust the ever-changing market conditions. So the thing about trading is like market conditions always change and nobody ever tells you when. It doesn't give you a heads up. So the best way to stay in tune with those market changes is to continue to backtest. All right. So backtest extensively, backtest regularly. Not only will you be up to date with market conditions, but your execution, and you will actually get a better eye for the charts. All right, so set very hard process-oriented goals for the next month. You gotta challenge yourself. That is what's gonna keep you in the game. That's what's gonna keep you motivated. That's what's gonna make every win or progression, step forward, all worth it. All right, so just set very hard expectation because time is going to pass anyway. So you might as well do the hard things now. So when everything comes into fruition and things start clicking, you can get the most out of your personal bull market, okay? So payout plan. This is something that not anybody talks about. So especially if you're doing like prop firms, or it could be a personal live account, right? This is something that I went through. I trade prop firms. And one thing that I did before was I used to take the max amount of payout. So normally with Top Step, you can take out 50%. So I would take out 50% on my payout, but then I would blow up the account. And I wondered why I did that until I realized that dramatic changes to your account balance can cause you to blow up, because your account balance and your mental account balance is actually very intertwined. If you're so used to risking 5 contracts, let's say 2 minis per trade, and then you take out 50% and now you can only trade 8 micros. That's a huge jump. You're so used to making a certain amount of money with these 2 minis. Now, because you withdrew so much, now your mind has to automatically adjust to this huge drastic change. It can cause greed. It can cause you to over leverage due to your new account balance and then cause you to blow up. So if you have a funded account and say, for example, Top Step, they pay out every 5 days. Some people pay out every 10, or if you choose to pay out every 20. So for the payout every 5 days, take 15% out of your profits out. Okay, that's going to give you enough money, but also it doesn't decrease your account balance so much where you have to make a drastic change. Payout every 10 days, 30% of profits, right? So we're just doubling here. And then pay out every 20 days, because after 20 trading days, you probably grew your account big enough to a point where if you take out a big payout, your risk shouldn't change but so much. Like, it's going to change, but you will still have a big buffer. I think the 20 trading day payout is more focused on the buffer than the actual risk itself, all right? So create a baseline. Anything above that baseline is yours to keep. For me, once I hit that $6,000 line, anything above that $6,000, I just go ahead and pay myself with and bring my account balance back to $6,000 every single payout. As far as personal live account, same thing, create a baseline. Anything above that baseline is yours to keep. If you want to grow that baseline, just take 50% of the profits. So if my baseline is $6,000 and it's time for me to pay myself out and I made $8,000, then instead of taking $2,000 out to bring me back to $6,000, I'm going to take out $1,000. So now my new baseline is $7,000, and then I'll just keep doing that. And last but not least, final notes. And this is something that I created for you that I think that you should take with you. Of course, there was a lot of value into this presentation, to this video, and certain things might stand out more to others, right? But for me, I think that learning yourself more than any trading system is far more valuable, okay? Because every trading system has its ups and downs, but you have to learn yourself in order to handle each up and down. All right. Then monitor your habits in every thought during your trading sessions. This kind of still goes under number 1, but once you monitor your habits in every thought, even self-talk, you can start to see what patterns, rather healthy or toxic, that you have, right? What conditions trigger you, and how can you not succumb to your emotional impulses, right? What conditions trigger you and why? Same thing. Remove the dollar from your trading and replace it with risk to reward ratio and good habits. I put my profit targets according to risk to reward ratio because I get infatuated and I love the idea of only risking $100 to make $500. I feel like, I'm pretty much finessing, or I'm making the market my bitch, right? Where all I did was put up $100 and I got back 500, or I put up $100 and I made 250 or $300. Like, I get a satisfaction out of putting up as little money as possible and getting out as much as possible according to my risk to reward ratio. And this induces good habits because, yeah, that's my ego talking, but that's my ego on my process oriented side, not the ego on my outcome oriented side. All right. Keep your trading plan very minimal and you will make so much money that it doesn't feel right. Okay. You'll be very successful. The more simple it is, the more minimal it is, the less you do, the more you obtain. It's just, trading is a paradox in and of itself. And if you need help creating a simple and easy trading plan, then you can book a call with me, either consultation or mentorship. It's a free 30-minute call. We'll discuss what you need and how I can help you with the link in the description below. After you have it set up, stick with it and stop learning. The more information that you take on and the more you try to learn, the more overcomplicated it becomes. And just for food for thought, more information is not going to take out the uncertainty aspect out of trading. It's not going to take out the gambling piece out of trading. There is no information in the world that you can gain that's going to stop you from losing. So just stick to one thing that has its pros and its cons, its ups and its downs. Learn how to mitigate the downs and emotionally handle the downs better, and learn how to optimize and scale the ups. And that's pretty much all I got for this video. I hope you guys enjoyed it, and I'll see you on the next one.